All right, let's dive right in. This week, we are looking at a huge crossroads for the EUR-USD. We've seen an absolutely powerful bull run, but right now, the price is knocking on the door of a major, well-established resistance zone. You know what that means? The battle between buyers and sellers is about to get very interesting.
So this is the big question on everyone's mind for the week of April 20th to the 24th. Do the bulls have enough gas in the tank to smash through this ceiling and head for 1.1900? Or are the sellers about to step in and send this thing into a sharp correction? To figure this out, we're going to break down the technicals, look at the fundamentals, and then build a solid forecast for the week ahead.
Man, last week was pretty much a one-way street for Euro-USD, right? It was all about that bullish momentum. For most of the week, buyers were completely in the driver's seat, thanks to a weaker US dollar and this growing feeling that the European Central Bank might stay tough on inflation. The buying pressure was just relentless.
But then, Friday happened, and Friday's session ended with a pretty clear warning signal to anyone who was paying attention. Even with all that strength during the week, the way the candle closed suggests that this buying momentum could be running out of steam. And when that happens right underneath a massive resistance zone, well, that's when smart traders really start to sit up and take notice.
What we got was something called an inverted hammer. Now, this pattern is a classic sign of potential buyer exhaustion. Think of it this way. The buyers tried their best to push the price higher during the day, but the sellers came in with enough force to smack it right back down before the close. It's a major red flag that the balance of power might be starting to shift. Okay, so with that warning shot fired across the bow, let's pull up the charts and really dig into this technical battleground. We need to look at the evidence for both sides here. The bulls who've been driving this incredible trend and the bears who are getting ready to defend this key area.
Now, first things first, let's be super clear about something. On the bigger picture, the higher timeframes, the overall trend for Euro-USD is still bullish, no question about it. The structure is just undeniable. We're making higher highs and we're making higher lows. That's the textbook definition of a healthy uptrend. And as long as that structure holds, a lot of traders are going to see any dip as a chance to buy.
But, and this is a big but, that beautiful bullish structure is running smack into a brick wall. The key resistance area, the immovable object, is sitting right between 1.1800 and 1.1850. This zone is so important because we've seen huge reactions here in the past. This is where sellers will likely make their stand, and it's where those early buyers might start cashing in their profits.
All right, so this is where having your key levels mapped out is absolutely crucial for any trade plan. For the bulls, if you see a confirmed break above 1.1850, that opens the door to our next targets. 1.1900, 1.1950, and then that big psychological level at 1.200. Now, if we see a rejection, the key support zones to watch for buyers to step back in are 1.1750, 1.1700, and if things get really messy, deeper support at 1.1650. Look, the charts tell us where the battle lines are drawn, but they don't tell us what's going to trigger the fight. For that, we need to look at this week's market movers. The economic calendar is packed, and any one of these events could be the catalyst that either fuels a breakout or triggers that sharp reversal. One of the big reasons the euro has been so strong lately is what's going on with the European Central Bank. As this quote says, traders think the ECB is going to stay firm, or hawkish, in its fight against inflation. If we keep hearing that hawkish talk from ECB officials this week, it could be exactly the fuel EURUSD needs to break higher. But if their tone softens, even a little bit, you could see that euro strength vanish in a heartbeat. Okay, but let's talk about the main event, the absolute headliner for this week. It's the U.S. inflation report, the CPI data. This is huge. This one number has the power to completely shift what the market thinks the Federal Reserve is going to do next, and it can move the US dollar and, by extension, EURUSD very, very aggressively. And look, how this plays out is actually pretty straightforward. If the US inflation number comes in hotter than expected, it dials back the hope for Fed rate cuts. That strengthens the dollar, which would almost certainly push EURUSD down. On the flip side, if CPI comes in weaker, rate cut hopes get a boost, the dollar gets weaker, and EURUSD is likely to rally. This one data point could literally decide the fate of that resistance zone. And then, of course, there's the wild card. The thing that can just throw a wrench in everything. Geopolitics. Right now, there are rising tensions in the Middle East, and anytime you get a spike in fear, investors do what's called a flight to safety. And in the currency world, the number one safe haven asset is the US dollar. So, a sudden shock or bad headline could cause a rush into the dollar and push EURUSD down hard, no matter what the charts are saying.
All right, let's put it all together. We've got the technicals, the fundamentals, the wild cards. Let's synthesize all that into a realistic outlook and an actionable game plan for the week ahead.
Okay, so my base case scenario, when you look at how hard we rallied and that little warning sign on Friday, is for an early week pullback or maybe some choppy sideways consolidation. Honestly, that would be a totally normal and healthy move for the market. After that, I expect the buyers to regroup and try to make another push to challenge that big resistance zone. For anyone looking to be a bull here, there is one number you have to burn into your brain: 1.1850. This is the confirmation level. A decisive break and, more importantly, a hold above this level would be a massive signal. It would confirm that the buyers have officially won the battle for resistance, and it opens the door for a move up towards 1.1900. And on the flip side, for the bears, the line in the sand is down at 1.1700. If the price gets rejected from resistance and then breaks down below this support level, that would be a huge win for the sellers. A break below 1.1700 could be the signal that a much deeper correction is starting, and we'd start looking at those lower support targets. So how do we wrap all this up? What's the bias? I'd call it medium-term bullish, but short-term very cautious. What does that actually mean? It means we have to respect that the bigger trend is still clearly up, but the immediate risk of a rejection from this major resistance zone is high, which means right now, patience is everything. And that's really the question I want to leave you with. After looking at all the evidence, the strong trend, that warning candle, the key levels, and the huge inflation data coming up, what's your call? Do you think EURUSD plows through resistance and hits 1.1900 first? Or are we about to see a correction before the next leg higher? Let me know what you think.